Cedar Rapids, Iowa City, you win hands down for the most energy in 1,000,000 cups. Right? So before we get into too much of this, our name is PrairieSmarts. I just want to pick up on a point that Andrea was talking about, which is that name is purposeful, right? So I've lived in the Silicon Valley. I've lived in New York City. We want to start this and grow this here, and that's why we're taking the time to meet and come out to Cedar Rapids. Real quick, a quick shout out to the How Factory. This is actually how we found out about what you guys have going on there, so keep it up. Great work there. So one point is get out and meet as many people as you can. There are great people and great energy across what we're going to call the Silicon Prairie. And whatever you can do to help that energy so we can keep this and grow companies here, I think is extremely important. Okay, so with that, let's get into it. Anyone have a little trepidation or a little heart pulse on Monday?
Yeah. Monday, Tuesday, Friday.
Well, that could just mean you're alive. But we're talking about financial markets a little bit?
Absolutely.
Yeah. So, show of hands. How many of you know your downside risk in your financial portfolio right now?
I can lose it all.
Okay, that's always the easy answer, right? Working for free, there you go. Okay, well, you know what? We're going to talk about your personal wealth, and we're going to talk to you about what PrairieSmarts is doing, and we're going to do this on, what we're going to tell you is we're going to do this on a global basis. So, to get started, a couple things. Trivia, did you know that the only capital risk model that didn't fail in 2008 and 2009 was built here in the Midwest? Did you know the only financial services company that got upgraded in 2009 was here in the Midwest? So sometimes it's a lot better to be prairie smart than it is to be street smart. Now, how do I know that? I was the treasurer of TD Ameritrade when it got upgraded. Right? We went from junk to investment grade in 2009. My co-founder, Dr. Ron Piccinini, built the financial risk model for First National Bank of Omaha. So risk is a big deal, financial risk. So what does Warren Buffett say? Basically, risk comes from not knowing what you're doing. So that's to my question. Do you have a sense of what's going on in your financial portfolio other than the mallet of I could lose it all? Maybe there should be a scalpel approach to what really is my downside risk. And Peter Drucker says, you manage ultimately what you measure, and we're going to help you measure this risk in your financial portfolio. So what is risk, and how does it come into this idea of wealth? Well, so what is the wealth cycle? First, you've created something. You've created some wealth, and then you take a piece of that and you invest it. Right there is where you bring in financial risk. How you manage that risk results in either profit or loss, which then affects your wealth, which then you start all over again. So without understanding the financial risk, the downside, you're going at it a little bit blindly. So we are risk experts. We grew up in the financial services space. Combined, we have about 40 plus years of experience, and we've managed billions of dollars of money at risk. So a big part of that was margin lending. So if you have a brokerage account and you want to lever up, you use the collateral in your account, the stocks that you own, and the broker-dealer can give you a loan. Well, the broker-dealer sure as hell knows what the risk is of the collateral that they're lending against. That's where we have the idea of if we can bring that expertise to all of you, that's going to be a lot better marketplace because investors are going to be better informed. So that's what we did. We built a financial risk calculator. We built it in the cloud, and we built it to seamlessly integrate with your providers of financial services today. So we're going to be behind the scenes. It's extremely scalable, and we have some patents pending on the process and the work that we've done. So straight talk, the prairie, the Midwest, handshake still means something. We purposely went away from New York style or being headquartered in New York or even the Silicon Valley, because we want to give you unbiased, transparent, straight talk. So we're not going to tell you that your risk is yellow or red or green after you answer 10 questions. And we're sure in the hell not going to tell you, hey, David, the standard deviation of your portfolio is 0.86 and the correlation is 1.2 and your beta is 1.7. How do you feel about that? Awesome, right? Like, what the hell are you talking about? Well, unfortunately, that's what a lot of stuff is that you get. Oh, we got 1 minute. Okay, so we actually give you the risk of loss benchmark. We give you in dollars that you can actually understand. So we won the FinTech Cup in New York City, and we were one of 6 finalists in a worldwide event in London. We were the only US company engaged. We're rolling out with tens of thousands of investors this year, ranging from Silicon Valley to the Silicon Prairie, New York, and London. Here's a couple of the people that we're rolling out with. I'm just going to go through this quick. We've got 4 integrations going on right now. It's a big marketplace, 122 million accounts in the US alone. Here's some of the people that we're working with. Financial Guard is one of those online advisors that actually are going to give you risk metrics and not give you, well, we hope that our allocation works. And then we spent time in London. We just had an article printed in the Financial Times. So the Financial Times has ran our financial metrics, our risk metrics, to a focus group. And we're actually implementing London Stock Exchange data into our calculator now as we speak to ultimately roll out to the London marketplace. So, did I make it? Very close, okay. So that's it in a nutshell. A lot of information. We'll open it for Q&A.
Just like last time, if